Good afternoon, everybody. Welcome to your Monday edition of the Trader Merlin Show. Yes, it was a strange day out there. Not really unexpected. Of course, we had Jerome Powell speaking today, which, as you know, anytime that guy opens his mouth, crazy things have happened, which is kind of what I had the graphics set up for today. You see, it's not the best AI version of Jerome Powell, but I've got him as this little marionettist, puppet master, if you will, kind of guiding the economy. In this case, messing with money. It looks like that's... you know why the streams never start for me when Merlin starts? I'm not sure. I know I did get started a little bit late today. My bad. I was trying to get some graphics set up for you, some numbers and a bunch of other stuff. So today we'll be talking about a little bit about the economy. We'll talk a lot about the strike. We're going to talk about the housing market. And I have to give a big shout out to Landis. He's one of the guys who doesn't usually join us in the group. Sometimes he does, sometimes he doesn't. But he's on the other side of the world. And remember we were talking about how every January I try to do a thing where allow everybody to give a guess as to where they think the market's going to be by the end of the year. And when my computer crashed, that whole thing disappeared. Erased, gone. So Landis went back to one of the earlier episodes, found it, recreated like 99% of it. So thank you so much. Sent me the spreadsheet, just saved me a ton of time there. So thank you, Landis, so much. I have it updated. I put a bunch of the rest of people in here. I think there's like 70 people on that list. I actually have it downstairs because I was finishing it up this morning, and we will now have that backed up so we won't lose it again, and I'll share that with you guys here soon. But yeah, some lofty numbers on that list, I will tell you that. Is there a way to get to automatically start? That's a good question. I see Lisa saying, do you know why streams never start for me when I start? Seems like it's the norm, the default is like everybody seems to be having that issue that's in here as well. I don't know. I don't usually watch live streams. I'm usually trying to post the live stream, so I wouldn't be able to tell you the answer on that one. But and yes, I saw the comment in there earlier from Lisa as well. Quickly approaching 1,000 shows. Yeah, and I don't have anything planned. I mean, really, that's only 10 shows away. So basically, by the middle of next 2 weeks away, I will have a 1,000 show, but I don't have anything planned. I got no guests lined up. I'm too busy trying to get stuff done for Trading Academy and my team over there. So nothing on the books yet. Maybe I'll try to bring somebody on. Actually, you know, when you look at the 100th show or the 1,000th show, that might actually lined up with Naomi Brockwell's show on December 10th. Kind of right around that time. That may actually be. It'll be about 10 more shows. That could actually be somewhere right around there. Anyway. So let me start off with just looking at the September results. As you know, we came into this month, I think most of us came into this month with this preconceived notion that the markets are going to be negative for the month of September because historically September is a negative month. It's the only month of the S&P since the 1950s has a negative return. So you would think it's going to be negative. And I mentioned at the very beginning of the month that I think it's going to be a positive month because everyone keeps saying it's going to be negative. Interesting results this year. Let's start at the bottom and work our way up. Bring several guests on, including my family. No, I'm not bringing my family on here. I don't have much of a family, and I don't think they would want to come on this program. Your worst performer, by a long shot, was crude oil. Now, again, we have some pretty significant stuff happening this week with crude oil. So here is your chart. I'll put a vertical line on the end of last month just so you can see kind of where we started from. That's the month so far for crude oil. And it's been pretty bad. But remember, you have OPEC and the JMMC meetings happening this week. That could be a major market mover. Gut feeling, like I mentioned on Friday's show, it really feels like this is one of those moments where OPEC is going to cut production and jack prices up even more, so reverse this downturn we've seen in place. So be real careful if you're trading anything with crude oil on it over the next couple days. I believe, if I can check right here for you, I thought it was on Tuesday or Wednesday, but let's just make sure we have that date perfectly on hand for you. And that is, yeah, it's going to be Wednesday. Maybe Thursday? Where is the J? They're not even showing it on here? Sorry, it's on Wednesday. So Wednesday, it's an all-day thing. You can see right here the OPEC JMMC meetings. Be very, very, very careful with that one. Again, one comment from any of those countries could create havoc for the crude oil market. And as you've seen, it's been on a nice big downtrend, right? I expected that to kind of keep continuing to the downside here, but at some point, those OPEC members are going to get pissed off because their oil is so cheap and they want more money. They'll cut production, save themselves a few more years worth of oil, and all of a sudden, oil will surge yet again. Regardless, Does OPEC really have so much power nowadays since we are the largest exporter? Yes, they still do. Because it's not like one country, right? Collectively, there are a lot. You throw in all the countries that make up OPEC, and I can't remember all the names of the countries off the top of my head, but let's just go bring them up. And then there's OPEC and OPEC Plus. So if you look at OPEC countries, you are looking at Qatar, Indonesia, Libya, UAE, Algeria, Nigeria, OPEC. Russia is in the OPEC Plus, but you got Azerbaijan, Brunei, Bahrain, Kazakhstan, Malaysia. That's an OPEC Plus. Oman, Mexico is in there, South Sudan. So they may not be as influential because it's not one country, but collectively there is a lot of importance from OPEC today. And just them cutting production can have a dramatic impact. So yes, we are the largest producer, but it still has a big impact on oil prices when they make decisions. And again, if you have in Russia and you throw in some other bigger producers there, collectively they may actually be passing us. Chad BM says, let's go to Margaret. What was the name of the 4 countries, including the U.S., that are now competing with OPEC? That I don't know. We're part of the non-OPEC, but I can't remember the 4 that are in there. Just know Wednesday. Be careful. That was the moral of this story. I'm not an oil expert. Never claimed to be. So that was your worst performer, down 7.07%. Ooh, ugly month, but we may see a rebound there. Your next worst performer was that 10-year bond yield. This is something that's been of interest because, again, the cheaper that bond yield gets, the more likely housing prices are going to start to move back up. Why? Because more people can buy them. So 3.17% slide in yield, as you can see here. It looks like that trend is going to keep on continuing. We'll talk about housing markets here in just a second, and maybe things like IOIR or real estate ETFs might be a play for you as well. But that trend is your friend till the bend at the end. So for me, looks like it's going to keep on drifting lower and lower and lower until something changes that sentiment and yield on those bonds. Bullish oil, but tight, trailing tight. Well, you got to, if you're bullish on oil, you've been getting smoked for a while. Right, so the question is now, does this little bottom we had just 2 days ago, because it's a higher low, is that the beginning of something bigger to the upside? And personally, and as not financial advice, I feel like it is. I feel like this is that moment where, again, OPEC is going to say, hey, enough, we'll just cut production a little bit, and then we'll see things start to move back to the upside a little bit. But you never know. That trend is still in place until it breaks this high, which is right around 72.40. We're currently at 60. Oh, sorry, not even showing my charts. This little low right here is one I was talking about. Since we haven't made a lower low, that's the important part, right? Doesn't mean we're out of this downtrend, but it feels like we might be changing just a little bit. And here's that high point I mentioned. If we get above that 72.40 mark, then all of a sudden, hey, we're starting to make a higher high. Great. That could be that big turning point. So I'd be careful trying to be too bullish, Chad, on crude oil right now, just because you're going counter trend on a trend that looks pretty good. But maybe Wednesday afternoon, you'll get a much clearer direction, and that trend could come back in force. All right, sorry for not switching that page over soon enough. Number, I think, 6 on the list was that dollar index. I made it, talked about this quite a bit on how we kind of broke those lows of this yellow box that I drew out. And again, felt like we would see more downside momentum here. Well, we haven't really seen much downside momentum. It's definitely hovering at those lows and has not had a chance to get back on its feet yet. It's still making lower highs even over the past couple weeks. So still feeling the bearishness on this dollar index. Again, the weaker that dollar gets, the more bullish it is for our economy. So that is a positive sign for anybody who's long these equity indexes, which we'll get to here in just a second. Moving up that, no. There's the Russell 2000. Got them out of order. Russell was up 1.17, S&P up 2.65%. So I'll jump into both those right now. Even though the Russell was your one of your weaker performers today, only up 0.22%. The picture here is a little challenging. What do we glean from this? And based off my appreciation for technical analysis, this does feel like it's building pressure. It feels like it's gaining some strength here. So you got that high at 2,288 for that E-mini Russell, right? Not the high, but in that vicinity, which we just tapped into about a week and a half ago, and our lows are getting higher. So it's building pressure to the upside. If the dollar keeps dropping, if bond yields keep dropping, then I think you'll see this thing rip to the upside here. As we mentioned, when rates get real cheap, small caps tend to appreciate the money flow into them more than some of the big caps. So keep your eye on the Russell for a potential breakout here if we see that dollar continue to fall and bond yields continue to fall. I mentioned S&P. That was I think your fourth place finisher. I'm third or fourth place finisher. 2.65% for the month. This one's obviously much better because we have established this kind of breakout. Have not had a retest yet. A retest would bring this market back down to right around 57.20. Right now it's at 58.14. And again, looking strong. I drew out this little yellow box on Friday's show because it just feels like we're kind of in this not a lot of excitement consolidation. Now today is a little bit better because we have a bigger real body. You'll notice that the tails here, we had a much lower low at one point and then all of a sudden came screaming back to the upside. So this is a pretty positive sign right now for our markets, the way that today's candle finished and the actual structure of it overall. Hi Rita, thanks for hitting that like button. Always appreciate that. All right, I'm almost to the top here and then we'll get into some of the other topics du jour. Number three actually was the Russell 2000. Wait, man, I can't even talk there. The NASDAQ 100. The NASDAQ 100 up 3.34%. Similar, it's kind of a mix between the Russell and the S&P. Now, granted, the NASDAQ did break through those highs, but it's retested. It's retested that kind of breakout level here, coming back into this yellow box that I had mapped out from a few months. Oh, jeez Louise. What's going on here? It's a must. I got a case of the Mondays. You know what it is? I watched Garfield movie last night or the night before, and Garfield hates Mondays. I'm starting to be that I hate Mondays kind of bit. So I clicked the wrong one. Here we go. Here's your NASDAQ, which had the same similar picture as the S&P. Remember, the S&P broke out, and now all of a sudden starting to pull back just a little bit and then rallied today. NASDAQ, a similar picture. You had your breakout, which I was using this box here as my kind of breakout point. We broke out, and all of a sudden we came back down. We're retesting that, what was overhead supply, now becoming demand, and then boom. I don't have year-to-date percentages, Margaret. I could get those for you if you wanted to, but I haven't looked at that. Well, I have looked at it, but I didn't put them on the sheet. Maybe next time what I'll do is I'll do two columns here, and I'll just say September results and then year-to-date results, so we can do a monthly look at it. Yeah. Liz, you're having the same problems I have. It must be a case of the Mondays for you too, Liz. I can't switch the show properly. She can't type properly. It's Monday. Let's just chalk it up to a Monday. Okay, so that was your NASDAQ. Now we get to our top two over here. Gold, great month for gold. I mean, hard to ignore that trend. Here's your daily of it. I mentioned this one a while back. Let's get this lighted here. I mentioned this one a while back that I felt we were consolidating. We'll probably have a breakout, wait for the retest. There's your buy entry. It's been absolutely like textbook move. Now is the real concerning, not the concerning point, but it really depends on what happens from here, whether this pattern stays intact or it starts to show some weakness. So, you could look at this origin of this big move as the next point where it could pull back to. That'd be a sign of weakness in my opinion. If we come back down to this, it's not quite an RBR for those of you who are practitioners of that. You look at this small little candle right here that goes back to September 23rd. That would be a logical retest point because you have that impulse moves up, consolidated for a day, and then ripped out again. Well, we came back and retested that already. So it is my belief that we've seen this pullback done. I don't think you'll get down below the low of that candle from the 23rd, which is right at, for those that aren't watching, 2,638.6 on that gold futures contract. That's the low point where I think if we break that, then we're definitely going down. But other than that, I think we'll hold above that for some time. So there we go. Looking good for gold. But that wasn't your best performer. You wouldn't know it by what happened out there today. But your best performer, Bitcoin, up 8.57% for the month. And here's look at that nice daily candle today. Well, he gave back 3.62 on the very last bit of it. So unfortunately, he gave back a bunch today, which, would have been an even bigger gain for the month. But as you can see, it's been a pretty strong month, even though the month began right in the middle of this sell-off. Not a bad gain for Bitcoin. A little bit of profit taking here, I think, but I still think we're in good shape because we have seen this trend slightly change. It's still overall making lower highs and lower lows. But the fact that we broke this high from August 26 brings an air of confidence. Okay, we are seeing some buyers step back in here. We'll probably have a little bit of a pullback, and then we'll go and challenge that downward trend line. Then the highs from July, the highs from June, and boom, off to the races, go to all-time highs. All right. Down below Endgates, it's SeaTac, huh? You're up in Seattle. Well, good to see you, John. Well, who's on a date? Merlin must have been on a date. No, definitely not. I'm not. Dating is long gone for me. No dating. What a pain in the butt that was. Hated dating. Anyway, there's your monthly results for September. What I'll try to do is I will try to add on an annual for this market. But let's just real quickly look at, you can just simply go here and click on 12 months and zoom out a little bit, and that'll give you an idea of where we are here. So this is on Bitcoin. So for the year on Bitcoin, you are looking at a gain so far this year of 50%, almost on the dot. If you're looking at that S&P 500, and even just a great year so far, 20.63% for the S&P. So there's your broad markets. Crude oil in the year, this is going to be screwed up because of the big downtick there. But overall for crude oil, pretty ugly. You're down 4.86%. So there you go. But I'll add those into our next month. You'll get those for the October review. All right, Lisa says, quick Bitcoin question. When I want to cash out, do I have to transfer the Bitcoin back to the broker I bought it through, or can I use another platform? You can use any platform you want. Any platform you want. So if you bought it on Coinbase, you can send it any exchange. Doesn't matter where you bought it. So yeah, totally interchangeable. You know, in theory, you can do the same thing with stocks, right? You could buy stocks on E-Trade, and then you could actually have them moved over to another brokerage firm if you wanted and sell them there. But crypto's much easier. Just, you know, one thing, when you are looking to move and sell it, Lisa, you'll want to move it over to something that has ACH, right? ACH stands for Automated Clearinghouse, and that's what allows you to go directly from the exchange into your fiat accounts. And one other little trick thing that they'll try to do, so let's say you had some Bitcoin and you moved it over to Coinbase and you said, sell Coinbase, right? It'll usually put it in USD, right? You wanted to put it in USD. I know you're in US, Lisa, so USD. Once you get into USD, you just simply click the withdraw button and it'll say, oh, let's put it back in your checking account. With Coinbase and other marketplaces, what they try to do is they try to do an instant transfer where they charge you like $3.75. Don't click on that unless you absolutely need it immediately. You can use the one that says 3 business days. So you just select it. It takes 3 business days, and from there, it's free. So you save yourself, you know, a few bucks on that one. All right, next piece here, which goes right to what Oliver's talking about, and that's that Longshoreman strike. So I mentioned this a little bit on Friday, but you know, I think the magnitude of this is very far-reaching. So when you look at this Longshoreman strike, essentially what's happening is you have the Longshoreman Union striking on this bad boy, and they want all kinds of demands, and they want some very interesting things with this demand. And I got to run this by you guys because to me it's sign of the times. So obviously there's pay things in there. There's all sorts of terms and conditions. But one of the biggest things that these longshoremen are fighting for is a ban, an outright ban on all automation of any crane, of any lift, of anything that may require a human to move it, banning all automation. Now, this is very interesting because what do we talk about over the past few months here is how AI is going to start to get into this automation. Do they want an 80% pay raise? Boy, I tell you what, if I'm I apologize, but at 80% pay raise, if I'm the business that's the longshore, that's the port, I'll tell you what, I may look at it as, okay, we're going to slow things down for 6 months, but we're going to just go full on automation. You're fighting an uphill battle here. Now, granted, the union will probably win this. I forget what it is, but the president can enact he can call on an act, and I forgot what the name of it was off the top of my head, but he can call on this act that basically says you have an 80-day cooling off period, which will postpone this for 80 days, which is my guess what will happen, right? You're going to see someone step in here and delay this. Now, I can't imagine that any business would say, sure, we won't include any automation upgrades. No, the future of our company will only have humans. Someone's going to pass your business model. Let's see what else we got here. Yeah, the ban on automation is the part that just blows my mind. There's no way. Yeah, Taft, you're right. Taft-Hartley Act or something like that. So I think if this doesn't get stopped by the president and him calling in this Taft-Hartley Act, I think is what it was, something like that, you're going to see a prolonged strike. I can't imagine that this is going to get resolved very quickly. Telling an employer that you can't automate at all in any way, shape, or form, automation on any of the forklifts, any of the lift operators, any of the cranes, all that stuff has to be human. Maybe you can put it in there in the contracts for a couple of years, but you know that they're going to be pushing for automation. It just makes sense because then those ports could operate 24 hours a day. We'll have automatic boats. I mentioned this as a problem when we talked about AI. I don't see this problem happening today. I see this being a huge issue in, let's say, 5 years. And maybe that's how long these contracts are for. I'm not familiar with that at all. But these longshoremen are trying to save their hides, trying to save their jobs. And it makes sense. I empathize with both sides because if I'm a longshoreman, I know the future. The future is that every part of this piece that you see on this dock, from everything that offloads those containers to the inventory, to the moving, to the shipping, to the putting them on the trucks, that's all going to be done via AI and robotics and automated systems. It's just a matter of time. Even the trucks, I mentioned this earlier and someone commented, I think it was Naum commented on the site. He says, look, you're going to have truckers sitting around if this goes to strike, and those truckers are going to sit around idle doing nothing because they're waiting for the containers. Yeah, this has a huge domino effect on the economy. And if it's a week or so, I don't think we'll see any real impact on our overall market. So when I look at the the longer term charts here, I don't think I'll see anything too dramatic happen to the S&P. I do think it'll bring some negative pressure, downward pressure on the overall markets. But if we go into a couple of months, remember we're going into Christmas. Now most of the holiday season items are already in the United States, right? But I'm sure that there's some that are still arriving, late arrivers, late products. So it shouldn't be that big of an impact. But the longer that this goes on, the more likely this is crude oil. Let's go into the S&P. My apologies. The longer that this goes on, the more pressure it's going to put on this market and really start to drag things down. So if this goes on a couple of months, man, short them if you got them. I think it'll be that kind of situation. Short them if you got them. And Miles said if the president can force them to go to arbitration, the union always asks for the moon and then sells. Correct. And that's probably what's going to happen, Miles. I don't see this. It'd be too damaging to the country, and that's part of the reason he can go to this Taft-Hartley Act is if it's damaging to the economy in an extreme way, the president can step in and say, no, hold on a second, guys, let's you're not going to strike. We're going to figure this out, and that's probably what's going to happen. Eric says puts on Timu or Temu, however you pronounce that one. What would happen if all sectors of the markets are automated? I'll get to that in just a second. Taft-Hartley. Thank you, Margaret. I knew the name, I just couldn't think it off the top of my head. But the Taft-Hartley Act will allow the president to put this on hold and brings both sides of the table and put presidential pressure on it. As was said here, the unions ask for the moon. They're going to ask for everything under the sun, and then they'll probably settle on something. But to the question that came in from Robert, what would happen if all sectors of the market are automated? Let's just look at this picture. And just think of everything you see in this picture being automated. And I know it may seem far-fetched now, but with Starlink and automation, there's almost no need to have a crew on this boat, right? You're basically just having a crew on the boat to make sure it doesn't sink, there's no holes in it, and pirates don't come up, but that can be all automated too. Just strap a bunch of 50 caliber rifles all around that boat. Pirates coming. I'll tell you that. I'll leave them all alone. So we can get to the point where I don't know how many people crew one of these massive container ships, but now you got it down to a skeleton crew. So you're going to lose 75, 80, 90% of the staff that does that. Now, you have up here in these booths, you have a team that's, the crane operators, and they're lifting those containers out. That's all going to be done with AI and robotics. That will all be just computers. The boat gets put in a specific position. The AI drops that crane, picks up a container, ships over here. And then you'll probably have a fleet of Tesla electric trucks that are fully automated. Again, this is not this year. This is, let's say, 3 years or 4 years out. We're just about to the point where we have a full driverless car in the United States. It's there. I've seen them. You got to keep your hands on the wheel. But in a couple years down the road, those Tesla semis will be fully automated, and they'll just go to their position. It's all communicated with this truck that's offloading the containers. It drops on the truck. And this thing will, I hate to say it, may become more efficient than currently. So not only is it cost effective, but it also becomes much more efficient. So this thing starts to move faster and faster and faster. It also moves 24 hours a day, 365. This is why those longshoremen are fighting it. And I totally get it. I'd be fighting too. If I was a longshoreman right now, I've got to look at this, and I know that my future is starting to look pretty ugly. Meaning, I don't know how much longer I have to work in this profession because of automation taking over. So, absolutely right. They should move on, fight or move on. So, in this case, fight. Make sure you get your union to back you up. What I'm curious to see is, are we going to see the ports on the West Coast? Because the West Coast hasn't gone on strike, but they are part of this longshoreman thing. From my reading, it's 45,000 jobs, which doesn't seem like a lot. But I think you can all appreciate those 45,000 people. The amount of money that they bring into our economy is not like a couple $100 million. It's like trillions of dollars worth of commerce coming through from that eastern seaboard and the Gulf. So to me, this is huge. Oliver, I didn't see the update. I know that they were talking about striking as of midnight tonight. My guess is it will probably go to that point. Biden will step in and have a document that says, no, you guys can't. President says you can't do that. We'll come to some agreement and avert this. Because, again, this could be huge. Part of me wants to see it go to strike. I like the disruptions in the markets because it creates volatile swings. Today I had one short-term trade today on the S&P, was trading a breakdown on when Jerome Powell was speaking today. Great. It was a very, very short-term trade, like 10 minutes, but I like intraday volatility. The other trade I made today was Rivian. I made multiple trades in Rivian. I sold, just so you guys know, I sold the 1150 puts, so I was already in the money on those ones, and I sold some $12 calls against some positions I have. So there you go. Let's see. Can trading be automated? Robert, trading is automated. The vast majority of trading is automated. It's algorithms. It's high-frequency trading systems. Most of it's already automated. So, yeah, that's already there. They make clothes to support the brothers and sisters in the East Coast. Yeah, that's what I think is going to happen all over. That's why I was bringing that up. They're not a part of it, but I think that they'll just go, you know what, we're going to take a couple days off. All right, because when it comes to them negotiating their contract, I don't know if it's overall contract, but once that Western Coast gets to their contract, hey, East Coast, remember when you stood up for you? You're going to go on strike for us. So, let's see. Margaret says, automate the southern border. That's a tricky one. That's a touchy subject and a very tricky situation. That's a little bit more challenging, I think, than automating shipping and supply chains. I got an email from NCBFFA, National Customs. What, they're telling you that they went on strike? Blue Diesel says, so those 45,000 jobs causing that big disruption is like a weak link. We need to fix that. No. Well, the question, Blue Diesel, is what do you do? You have so many ports of entry into the United States. So you go along that eastern seaboard, you can't just say, hey, any city can be a port. There has to be infrastructure put in place, not only on the land, infrastructure to get all those goods and services off with major freeways and highways leading from the port to make it easy, but also there needs to be specific depths and dredging and infrastructure pieces put in the water to make sure that you have enough capacity to handle that type of shipping, not to mention the ecological issues that are put in place by having so much boats and petroleum and just stuff in that water. Ports aren't the cleanest. You don't see a lot of people going out to the port to go fishing. So they're kind of select locations. So what do? Do you make the ports bigger or more of them? Fine, but they're still going to be controlled by the longshoremen. Right? The unions are going to be controlling those. So even if we made double the amount of ports, if they're all under the control of longshoremen or the same unions, and these unions rally together, then we're still at that same point of vulnerability. So this begs the question, do you do away with unions? Well, look, I'll ruffle some feathers here. I apologize for doing this. I was in a union. I hated it. Because I worked my butt off. I would go to work and I just throw my headphones on and boom, I flew through my job, got it done. I was surrounded by old people, no offense, but at the time I was in my early 20s. These guys were in their 50s and 60s that they just didn't want to work. They milked it. They knew they were protected. They didn't work hard at all, so they were just kind of like, bit to do, and I ended up doing their jobs. I didn't mind because I just wanted to get stuff done, and it just was fun for me. But in many cases, in a union job, you have this spectrum of employees where some are amazing workers and they work really hard and be the best they can. Then there's others, and in my experience personally, this was the majority, where people that just said, fire me if you want. You can't. I'm in a union, so I'll just do the bare minimum. Instead of me running to go to the back aisle to get something for you, I'm going to walk. I'm going to walk at my speed, at my pace, because what are you going to do? You can't fire me for that. So unions, they're great because they protect the consumer. They keep things okay for that consumer. Because if we didn't have the unions, what do you think the ports would do? Lower wages. They wouldn't get cost of living increases. The conditions might not be as good. So, you've got this love-hate relationship for me with unions. And same thing with businesses. Unfortunately, you get the unions asking for the world. The businesses don't want to give anything, and they usually compromise in the middle at some point. Unfortunately, we get these strikes. So, can robots go on strike? I'm sure they could. Whoever programmed them could say, hey, if these conditions aren't met, I'm going to hit the strike button. You see these robots walking around with signs. Boycott the ports. Boycott. Do they talk in a robotic voice? So I'm pretty sure that at that point, the robots would be owned by the company. So, let's go to my futuristic world here. Looking at this port in, let's say, 15 years, right? 10 to 15 years, the amount of automation here, I think, is going to be just off the charts. And the port itself will control all the infrastructure. And now it's a question of, do these ports remain independent? So you'd have the Port of Houston, the Port of Baltimore, the Port of Long Beach. Are those separate corporations, or are they all owned by some major port authority controlling entity? In my opinion, these guys will be independent, and there'll be people that buy the ports, automate them so that all those robotic pieces are under their control, and then they turn this into an incredibly efficient running machine that makes a ton of money. What that does now is that gives them the power, right? So that port is huge value. So if they're looking for something, if they're trying to get something from the state or from the government, they can slow down or increase or do whatever they want with that port in order to get those demands. So it puts that business in a power position against the governments and local infrastructure. So anyway, that's futuristic sci-fi stuff we're talking about there. But this is the real part of this is it should start tomorrow. It will probably start tomorrow. We'll see how many days it takes for the president to step in and say, hold on a sec, let's not do that. But in my opinion, this isn't, because it's not one port, because this is like the entire eastern seaboard and Gulf, they're going to have to stop this one. Chio, this is a great question, and I'd like to bring up other people on this because I've asked myself this question many times, and I don't have an answer for it. I'll give you my quick Cliff Note version, but I think at some point we should have a lengthy discussion on this, and I'll see if I can bring in some robotics and maybe have a panel discussion on this one. But if we continue to see more robotics, and given Elon Musk's perspective, we're going to have billions of robots. He says the run rate, the capacity to build will be 1 billion robots a year. Well, that means 8 years we have one robot for every single person on the planet. And that's just like a robot, like a humanoid robot. That's not talking about automated systems that like this crane operator, crane lifter, all those are automated systems, not necessarily robotics, not necessarily a humanoid robot. So when we get the automated systems in place that now replace the crane driver, replaces the boat drivers, replaces the truck drivers, replaces, all the human element here, it's a great question. Where do they go? Do they go back and, re-educate themselves? And are they going to go to McDonald's? No, because McDonald's is going to be fully automated. I look across the spectrum and I have to ask myself, what jobs aren't going to be influenced and controlled majority by robotics? They're going to go train to be lawyers? Well, there's already proof that some of these AI systems and robots are better than the actual lawyers coming out of law school. So yeah, I don't know, Chio. At some point, where do we go? Right? Where are all these workers going to go? I mentioned that I think what we'll see in 10 years is probably one of the highest levels of unemployment in the United States history. Why? Because I think most of the jobs are going to be robotics. So either you find a job that's not impacted by robotics, or you go and learn how to program and create the robotic systems or maintain those robotic systems, or find something that isn't involved with it. So I don't know. It's a great discussion. Oh, maybe you guys are funny. I'm going to leave all that alone. Yeah? That's true, John. You can go to Trading Academy and it says suffer for years learning how to trade. Well, I don't know if I'd call that suffering. I actually enjoyed the process. I was frustrated with my own progress, but then, at a certain time, you're like, okay, it's starting to get better and better and better. But yeah, you retrain yourself on something. And I think that for all of us, we have a huge advantage because even with robotics, even with automated systems and AI trading, there's still plenty of opportunities for you and I. If the market was 100% algorithmic driven and AI robotics moving prices up and down, remember, we're so small that we're not impacting prices. We'll be jumping on things like SPY, which will have billions of dollars traded per day, and I'm trying to make a $50,000 or $100,000, maybe $10,000 or $1 million transaction. I'm nothing on the grand scheme of things. So the AI, I don't even mess with the AI. I just try to figure out what AI is doing, what price is doing, and capitalize on it. So trading, trading is something that should allow you to secure your financial future regardless of what happens. Kind of like, to give a man a fish, he ain't going to survive very long. Teach him how to fish and he can survive forever. I think I think trading is kind of like the fishing analogy. Bring back better. I'm staying away from your political, I see your little political fish hooks over there. I'm staying away from that stuff. Dang it. I had some really cool graphics for you today, but I didn't bring them up here. I saw an interesting article today talking about inventories, and just 2.5% of homes have changed hands this year. So I'm going to bring this graphic up because to me, we talked about this being a housing issue. 2.5% of homes change hands this year, and that's through the first 8 months. That's the lowest rate in 30 years. 30 years we haven't seen this low of numbers. And that also, stretches, I think it's going to get a little bit worse here. Now all of a sudden you have that 10-year falling, yields could be rising, yields could be falling, more affordability. You're just going to drive more and more people, price them out of the market. So this is that other shoe that may potentially drop here. And if you look at things like IYR, there's plenty of real estate ETFs, but IYR is kind of the main one that I'm looking at. You can look here and see that it's been fantastic since October of 2023. Like really, we have seen a monstrous move from those lows, all roughly, because I can't get this thing to click on directly. You're looking at roughly a 40% increase in IYR, which is U.S. real estate, since October of last year. So call it a little less than a year, 11 months, that is up 40%. Now, to me, that's a little bit lofty. I think that's a bit long in the tooth, right? Prices got driven up, but we haven't seen them really come down. They've really been kind of going sideways, and sellers aren't selling. That inventory is a problem. So I really feel bad for anybody who's in that position right now where like, I want to buy a home. Well, good luck. I would say you got to wait here a little bit longer for it to come crashing back down, and it may come. I don't know when or where, but I'm a firm believer that you don't get moves like this without some corrective phase to it. Whether you're talking about real estate like IYR here, or we're talking about that S&P 500, which has just been going absolutely nuts since those lows back of last year. So, just something to keep thinking about. I'm always thinking about what's going on in these markets and what are the next big problem areas. To me, real estate is potentially a big one. Let me see. I got a bunch of comments coming through here. John says, algorithms react the same when presented with the same data set. So each algorithm is going to be programmed by each entity. So Goldman will have their own parameters and JP Morgan will have their own parameters on how their AI is going to operate. But yeah, they're all going to be basically doing the same inputs. So if you can find out how those algorithms are created, you could actually front run them or understand when they do certain things and act on that. I look at that as very similar to what I did back in 1998 when I started day trading. The institutions were the big ones that moved the markets. That will never change. When I was day trading, you could see Goldman Sachs. It would say GSCO on the screen, so I would just follow what Goldman Sachs was doing. Now they're using electronic communication networks, different ECNs and digital networks to remain anonymous, but if you put your mind to it, you can follow those digital networks and you can see what they're doing. You can see when they're buying, what the reserve orders look like, and to me, that just gives you an advantage. So I think there's no difference between what happened with me in 1990s and what AI is going to bring to the table. It's just simply understanding who else is trading. We know it's AI. Okay, so how is AI thinking? Are they programmed in off of a moving average, convergence, divergence strategy, or is it Bollinger's and stochastic strategy used with volume? they're all using price points and trading price. So to me, I believe that AI is not going to impact you or I in any way as traders. Do I think it's going to impact us as screenwriters, as accountants, as engineers? Absolutely. I think that's every other aspect of the markets can be potentially replaced by AI, and that's scary. Let's see. Robert says, is a better option to buy Tesla stock? I'm regretting that my shares got taken away, and I keep reminiscing over this one, but I had sold a bunch of puts on Tesla when it had this just massive fall back here, and that was in April of this year, and I sold the 165s, and all of a sudden in like a 3-day window, it went from 139 up to 167. I would still be owning my Tesla. I think Tesla shares. I think Tesla's got a lot higher to go. I mean, if you look at the business models of what they're into, people say, and I know Tom, I think I must have pissed off Tom with some comments apparently because Tom doesn't come here anymore. But, Tom would always tell you, Tesla's a car company, Merlin. Tesla's a car company. It's gonna come down to the same PE ratio as Ford, right? That was his comment multiple times in the chat here. And I was like, I disagree. I don't think Tesla is just a car company. Look, they have the Teslas, but then they have the self-driving car, and they're the furthest advanced of anybody with self-driving car. So yeah, they're a car company, but they got something that nobody else has. Then you have the robotaxi side of the business model, which could take over. They've got the charging stations all across the United States that other car companies are reliant on and plugging into. Now we're at 4 businesses already. You've got Optimus, which is the robotics side of things. You have one of the largest AI server farms in the world, which is powered by all them NVIDIA chips, just came online for Tesla. So you have business after business. If this world does go more AI, Tesla's right at the forefront of it, man. They've got they're training their own language model right now. The satellite internet is not Tesla. So Starlink is not Tesla. That's actually part of SpaceX, which those are separate, right? What you'll see down the road is an IPO of SpaceX, and that will have Starlink in it, which again, and that's going to be space exploration, Bravo, I know he's kind of a wacko right now. Certainly politically, he's driving me nuts. But as far as getting stuff done, there's few people that I've ever seen in society get stuff done like Elon Musk. It might take him a couple years, but man, I think Tesla's a better play. I know I might have some haters in this one. Apologize, but I definitely think Tesla's a good one. Noam says layoffs are coming. Yeah, I think so too. I think layoffs are coming. And again, I think that the Fed believes layoffs are coming too. That's why we're seeing the belief that rate cuts need to be more dramatic, right? We had 50 basis point cut. Now let's talk about that real quick because that is definitely part of the discussion, and I'll bring up the table here so we can look at from the FOMC. Jerome Powell said the economy's in solid shape, and he specified a lot of data points, and I've done that for you here. I did it before Jerome Powell came out and said it today. We said the economy looks like it's actually in pretty solid shape. Now, if the economy is in solid shape, there's no reason to cut 50 basis points. That was a mistake. If the economy is running fine at 5.5%, then keep it at 5.5%, right? If your car is running well and it's got no problems, are you guys going to start switching things up? Let's say you've been using, call it mid-grade gas. Mid-grade gas, and your car's been running perfect. Everything's been great for a couple years now. You know what? I'm going to start using cheaper gas tomorrow. I don't want to save myself a couple pennies. Well, why would you do that? You risk damaging your entire perfection of an automobile with cheaper gas. So they did the 50 basis point cut, and then the forecast was November 7th meeting, another 50 basis point cut, and 25 in December. Today's comments by Jerome Powell changed that, folks. He said 2 normal cuts, but he alluded to 2 normal cuts, meaning 25 and 25. So if we go over here, notice now what's happened. It changed dramatically. There's a 62% chance now of only a 25 basis point cut at the November 7th meeting. You can see just yesterday was 53% that we're going to get a 50 basis point cut. Now it's 37. So the odds are definitely shifting towards 25-25, which would make sense to me. Right now, the forecast is for the end of the year. Forecast for the end of the year is still three rate cuts. So they're thinking September now will be 25 and December 50. But, it's hard for me to say, the economy's in solid shape and then justify a 50 basis point cut like Jerome Powell did. So that's kind of a strange move, in my opinion. But everything he said today sounded great, which is why, markets started to rejoice. You saw a nice little rally at the end of the day there. It's funny because I didn't catch the up rally. I caught the down sell-off. Let me go over here to the S&P and show you what happened on the daily basis. We'll go intraday today. Overall, it kind of fits this slow picture here that we've had for the past couple weeks, although it's been up. But on a 5-minute basis, you have this breakdown, which is my short. I had a bracket order to go short in here, and it filled it and then trailed it down. So I had a nice little winner on that one, but I didn't catch the upside. I just made one trade, got stopped out, and then stopped out for a profit, and then just walked away to do other things. But this is the type of stuff you get when Jerome Powell speaks. But otherwise, just kind of a choppy day. Yes, you'd have a couple big moves up, one big move up, one big move down, and then just all chop. So not the best day out there. Although I think that we're going to see a bit more volatility, particularly on Wednesday, as I mentioned with OPEC. But that won't be broad market. That will be crude oil predominantly. Let's see. Lisa says, housing has another issue. I just read about Mother Nature is vicious and insurance is extremely expensive, and some home buyers cannot secure insurance, which means no mortgage approval. Right. I mentioned I sold a house up in Northern California. Was that last year? Was it this year? It was last year. It was last year, and it actually wasn't a house. It was just land. And one of the main reasons that I sold it was you can't get insurance. There was no insurance on that property, and I wanted to build a home on it. But where it's at, couldn't get insurance. And if you could get insurance, I mean, we're talking incredibly expensive. So it just wasn't worth it for me. And then that may be, an issue in the Carolinas now, maybe an issue in the Gulf areas or in Florida where you're in a spot that usually gets hit by major storms. It may be hard for you to get insurance for your home. And then all of a sudden, when you qualify for a mortgage, they're going to require you to have insurance. And if you can't get insurance, you can't buy the house. So yeah, that could be another little Achilles heel for the housing market. Margaret, you trying to get me all riled up? You guys are hilarious. John Connor is going to come back from the future and save us. Spectrum dominates the internet where I live, and I'm sick of that. Yeah, I love having choices. Margaret, one thing I would recommend you do, highly recommend, is look around. I know I'm not saying you're not looking around, but one day I was frustrated with Verizon, and I had DirecTV and Verizon here. Verizon for the phone, DirecTV for television, and I just kept searching and searching, and all of a sudden I clicked on AT&T, which had no fiber optic ads or anything in my area, and I clicked, and it said, "Yep, we can install fiber in your area." And I was like, "Well, really?" There was no notification from anybody. AT&T didn't talk about it, and I just randomly got fiber, which I've been using for everything now. So I got rid of DirecTV, I got rid of Verizon, and I just have AT&T, and it's been fantastic. So check, go on to Google, go on to AT&T and other providers and see, because you might have fiber or alternatives to Spectrum in your area. Yeah, competition's good, man, because when you get stuck with one person, terrible. Kenny says, massive testable here, love to hear it. Yeah, thanks, man. And look, could you and I be totally wrong? Could this all be some smoke and mirrors thing with Tesla? It could be, but I don't think so. I think it's gonna keep on moving. Sorry for the side question. Late to the party today. What was a good ETF to buy Bitcoin? Not BITO. So BITO is a futures product that has all kinds of fees, and you don't even know what you're really buying, and there's no Bitcoin backing it. IBIT is a spot Bitcoin ETF with much lower fees. So yes, I would use IBIT to buy Bitcoin. Yeah, just go to their website and just type in AT&T Fiber. You type in your zip code or your address, and it'll tell you if it's there or not. That's how I stumbled on total accident onto it, because I wanted fiber for this show. I was tired of using the other stuff. My internet wasn't that great, and I was like, Google didn't have it, although I now think Google is in my area as well. But yeah, AT&T popped up. It was great. What's my next video? If it ain't broke, don't fix it. That's it, Liz. That's my next video. We're doing it. I'm kidding. This last storm, Helene, was devastating. I know, it's crazy. Watching some of the video footage, I'm just speechless. And I hope that there was a lot of people who lost their lives, and of course the damage is just off the charts. And if it happened to impact you, I hope you guys get back on your feet soon. It's definitely something tough to come back from. Mother Nature, you don't mess around with Mother Nature, man. People always complain how California is garbage and our politics and things like that. One thing I'm happy about California is if I have a natural disaster, there's no prep. It's here and it's there. I know some people here live in Oklahoma. Like Oklahoma, you're right in Tornado Alley. Like, you just know every year you're going to have tornado season. Like, that would just drive me crazy knowing that was going to happen. I guess everywhere we live, every one of us is going to have some sort of disaster potential for it. So I hope that all pans out well. Yeah, Helene, the video footage is crazy. Yeah, John actually mentioned something very interesting as well. Yes, IBIT has been approved for options. So this is great. You can now buy, let's say you wanted to just own long-term Bitcoin. Well, you buy IBIT, the ETF, and you get the, whatever fluctuations happen. And now you can be selling calls against that and earning interest, sell them way out of the money. Just earn some yield on those and get a little extra rate of return on your Bitcoin. Awesome. It's true, Lisa. Mother Nature always wins. Let's see. All right. Let me wrap up. As I realize all of a sudden I'm approaching an hour very quickly. It's crazy. Like, I think I told you guys on day one in February when I started, I think it's February or March of 2020 when I started this, I wanted the show to be 30 minutes. To date, I have not done a 30-minute on the dot show. I think 38 was like my shortest show I've ever done. So here is your economic forecast and outlook for tomorrow. Not really forecast, but Tuesday, you've got a lot of stuff going on. So tons of manufacturing. You got manufacturing PMI for Spain, for Italy, for France, for Germany, for the EU. You can see here for the European Union, they have their CPI numbers. So if you're trading the euro, careful with that one. That's got up about 2 a.m. Pacific time. So that you should be okay with that one. It's a wee hours of the morning. You get to the U.S. stuff, though, we have a slew of announcements here for October 1st. You've got manufacturing production, you've got ISM manufacturing PMI, JOLTS job openings, you have construction spending, total vehicle sales, and then look at all the FOMC members speaking tomorrow. Bostic, Cook, Barkin, and Collins all speaking tomorrow. Whew, man, what a busy day from a public speaking perspective for the Fed. So that's your major stuff happening tomorrow. On the earnings front for the 1st of October, there's only Carnival Cruise Lines, I think, is it for tomorrow. So that's pretty much it. Johnson, we don't mind if you change it to 60. Yeah, I have other things I got to do, my friend. I wish I could. We could all chip in and get Merlin a cake for his... Yeah, no, don't give me a cake. The good news is if you sing happy birthday to me, I don't have to hear it. There's something about when I get a group of people sing happy birthday, it just drives me nuts. But it wouldn't be happy birthday, it'd be happy anniversary. There you go. All right, everybody, that's going to do it for me for today. I hope you enjoyed. Be careful out there tomorrow. I'm curious to see what the next couple days do with regards to that Longshoreman and port strike. Could be very exciting, create a lot of activity for you guys as far as intraday swing trading and position trading as well. So thank you. If you got something you want me to cover on tomorrow's show, email me at tradermerlin@gmail.com. It's on the screen right now. Or you can go to any of the YouTube videos, put your comments down below those, and I will see you guys tomorrow. Take care.